Welcome back. Now, Statistics South Africa has reported a decline in total employment between 2023 and December 2024, with 91,000 jobs lost during this period. Despite a slight improvement in the fourth quarter of 2024, both full-time and part-time employment declined. Investec's chief economist, Annabel Bishop, has further analysis of the quarterly employment statistics print. Thank you so much for your time, Annabel. I was trying to reconcile the GDP numbers versus the employment numbers that we are seeing now, because we had a tepid increase in GDP in the fourth quarter of 2024, and that was mostly pushed up by the agricultural sector. Now, looking at these employment figures that exclude agriculture, does this marginal increase in employment then make sense?
I think it does. You know, we had a disappointing year last year. Economic growth was expected to be above 1%, and instead it was half that, coming in at 0.6% for the year and the quarter. As you correctly said, it was impacted by the drought. Interestingly, if you actually take out the agricultural sector from GDP for the whole of last year, you actually get growth of 0.8, not 0.6. And again, that just points to how weak the economy is and really the unsurprising nature of these jobs figures.
Yeah, it's really quite interesting. And you talk about that year-on-year decline in employment. And this is quite an interesting one, because this was in a year where we had very little or non-existent load shedding. And I'm wondering then, with this tepid increase in GDP and employment without load shedding, that really still emphasizes the strain that the economy is in at this point, right?
Absolutely, you're quite correct. And in fact, 2023 was our highest year of load shedding, and then 2024, the year of least load shedding in recent years. So of course, it does look like a complete anomaly, given that GDP growth was slower last year than the year before. Of course, if we do actually have a look at why, you know, one of the factors was that business confidence was depressed the whole of last year. And in fact, fixed investment growth didn't occur. We actually had a contraction in investment last year. Such was the weakness of the climate, such was the depressed nature of business confidence, that they didn't look to increase investment. And that's really what pulled down GDP growth. You might ask me, why was business confidence so depressed? And of course, partly because for the first 2 quarters of the year, we just didn't know what was going to happen with the election. High levels of uncertainty, obviously depressing sentiment. Even when the government of national unity was formed after the election in the 3rd quarter, people were worried it wasn't going to hold. There were concerns around its ability and longevity. And again, you could see there was an impact to sentiment. Really only by the 4th quarter we saw some improvement, but of course not yet deliverables, because the government of national unity was so young. So these are all factors which really contributed, with the presidency themselves saying that the freight crisis in South Africa takes off 4% from economic growth. I mean, we could look at GDP growth last year, 4.5%, were it not for that.
Annabel, are there any sticking points in terms of the industries that are most encouraging in terms of their growth potential and job creating ability, and maybe others that are of major concern?
You know, I'm just having a look at the breakdown, the statistics here. And of course, you know, the biggest collapse, if you will, in the jobs market last year, and that's for the whole of 2024, given that we're talking on an annual basis, was in mining. And again, that really points to the inability of getting bulk commodities out of the country. The mining sector battling to send their goods out the export channels in South Africa. In fact, to such an extent, they cut back on production, hence the fall in mining production, the fall in employment, because they can't actually get their money for production. They don't want to stockpile it. Eventually they cut back operations, and here you can see the jobs being cut back. You know, it's something that we know, but I suppose we worry that the progress at Transnet has been so slow in terms of repair, and that the progress on private-public partnerships in the transport sector has also been very slow as well. Only very recently, and it looks like, you know, very recently we had the announcement, there was some opening up in this regard from Minister Creasy. I suppose we are still sitting and waiting for the lift off in terms of infrastructure investment. That's what drove the good growth in the 2000s. If you look at GDP growth then of 3 to 5%.
Yeah. Annabel, what's encouraging is that salaries increased, but that doesn't necessarily mean that employed people are in a significantly better position, right?
Well, the good news here, and we have to have some good news,
Yeah.
is that we did see inflation drop off, both a lot this year and modestly, certainly last year, particularly towards the end of the year. Lower inflation means your real incomes start to rise. And in fact, inflation was 4.4% last year, which was below the increase in wages, as you point out. So we did find ourselves in a situation where there was some improvement in spend, but towards the end of the year, as we said, really likely more to come through this. And of course, you recall the recent very strong retail sales growth figure we got for January.
Well, just as we wrap up the conversation, Annabel, looking at the economic growth forecasts for the year that are definitely better than the performance we saw last year, could we have reached the bottom of the weak employment cycle then in 2024?
I suppose, so much depends on economic growth. And I would love to say yes, but we note with concern that business confidence remained depressed in the first quarter of this year, unchanged from its level in the fourth quarter of last year. It remained at 45. That indicates to us that the first quarter could be weak again. We could see a weaker job outcome again. We'd anticipate that as we move through 2025, we see economic growth this year of 1.3%. Instead of 0.6% last year. Stronger growth should help on the employment side, just as weaker economic growth last year compared to the year before, we saw this detraction from growth.
Yeah, well, indeed, we will be keeping a close eye on that. But of course, really, everything depends on that economic growth. And hopefully we can get to those levels that have been forecast by Treasury, 1.8. And maybe, Annabel, we could get to 2%. But thank you so much for your time and for your insights there. That was Annabel Bishop, Chief Economist at Investec.